straight
Should
up.
finish recap.
I am.
First
Okay, recap is starting right now. 10-12 recap. So initially going into the day, I was long biased because of Thursday's expansion. It was straight after FOMC, and if we look at higher time frame structure, we look like we're in a sell model. We just shifted market structure, and right here we took out liquidity, and this is a massive turtle soup. We had this order block, we had another order block up here. We could use mean threshold, slap it on here, and it looks really good, right? Plus this order block right here got tapped. I want to see if we have a breaker that we tap, but it doesn't really look like it. This is a mitigation block that we were kind of respecting on a lower time frame. Right here, we're respecting this. And we took out this high. I don't know. Let me see the intraday or the 1 minute chart to see what we have. Because off open, it looked kind of like 3 drives, not clean enough to be considered 3 drives. But we did take out this high. This place lower, and this was our market structure shift. And you know how I love sell models, right? I want to be in on the first inverse fair value gap. So it could have been this one, but we did get an entry here. This inverse fair value gap that sent price lower. This was probably going to be my entry for shorts if I was looking at the charts, because we pushed through. You can see we close below it, we tap in, and we respect the consequent encroachment of the fair value gap. So this is where I'd set limits for short directly after we go lower and we close below. So limits would be right here. My stop would be probably at this high, and mainly when it's going through my head whenever I'm trading, I want an order block a little bit above the mean threshold of an order block, because in ICT Twitter Spaces he drops a ton of knowledge that not much people know, and whenever you want a low risk stop, price usually respects like a little bit above the mean threshold of the order block, and that's where you do not want price to return to. So you can see right here, this is where it would be if I got an entry right here, but this is 17 handles. So our proper stop would be at this high if you're willing to risk a lot more, but I'd be wanting to risk something down here like 10 handles, maybe 15 handles, depending on my risk. This is also a silver bullet too. And coming down here, this is a little fair value gap that we kind of filled, but we did respect it throughout the day. Yeah. Okay, and when you see fair value gaps, you want to see the ones that actually do support pricing going lower. And this could also be considered immediate rebalance. I just gotta confirm real quick. I'd say that this is immediate rebalance, yeah. Okay, never mind. Scratch that. It's not fair value gap. But when price immediately rebalances a fair value gap or doesn't let fair value gap fill, that's a good indicator for bearish buys. So when you're seeing price instantly fill up these gaps, fill up these orders, you know we're gonna go lower. And when you see that multiple times, it's just something I really like to see. Let me go check out DXY and see how DXY was moving on the day. Okay, up on the day, DXY was bearish. Looked like it was bearish pretty much the entire day today. I just want to confirm because this isn't really something I would want to see. Yeah, today was Thursday. Okay, no, we're good, we're good. Oh wait, no, we were bearish until, shoot, we should have been pumping here. I probably wouldn't have taken any, at 30. Yeah, this entire dump, and we had a little bit of retracement into this, what was it called? I'd say mitigation block right here. Oh, okay. But yeah, you can see we respected this. You could also get more precise, find this inverse fair value gap right here, and actually, do we even tap into that? Yeah, I'd say we kind of got close to tapping into it. Up on the 1 minute, see if we have any PD areas that will send us lower. Because we had this lower, move it higher, lower, tap back up here. What do we respect? I just draw it out to the left, see if we got anything that was precisely respected. Not much. We have this inverse fair value gap, but I wouldn't consider that high probability. Because for high probability, inverse fair value gaps to form, we want to see it. We want to see price tap into these fair value gaps and then support price to go higher. So when you do see a fair value gap that has worked and it has pushed price to a point of interest, then it gets inverse. That is a high probability inverse fair value gap. So you can see we swept this high, went lower, retraced. I would have wanted to see this breaker get respected to push us lower or higher on NQ, but it didn't happen. We pushed up a little bit higher, and we had this little bit of a first leg right here and went lower. And that's all I really saw. So hopping back on NQ, inverse fair value gap, we went lower, boom, retraced. And immediate rebalance plus this breaker block right here. I'd say that this breaker was respected pretty nicely. If you want to throw the wicks on it or the bodies, I mean, we got up to the body of it and we respected it really nicely. So that was also a good play. And I didn't take this either. So these are our first and second leg distributions, and I think you guys can identify that by now, right? First leg, second leg, and then past that, we just go lower. And our draw would have been the original consolidation, which is just part of the market makers. It'd probably be down here, would be our draw. But right here is our overall target for market maker sell models if we have a higher time frame one. Okay. And do you guys understand everything I'm saying? Do we have any questions right now?
No, not really.
Okay. Well, I mean, anyone else?
Yeah, I have a question.
What's up?
So,
in a market maker buy or sell model,
Hmm.
why do you want to see the inverse fair value get tapped instead of the actual fair value
Because when we're
gap
going,
getting
okay,
made?
so we have buy side and sell side of the curve. Let me find an example of it working. I think that this would be a good example right here. Just let me check, see if we have a fair value gap. We have a volume imbalance. We don't really have a good one right here. Let me find a prime example so you guys can see it clearly. Because I would be looking for something like this to be taking inverse plays on, or let me find something during our trading times, and I'll show you. I'll give you like a more in-depth explanation on it. No, this is just too crazy. Price action is too crazy. This could be considered one, but I want to get like a really tight entry. Okay. I mean, this isn't an inverse fair value gap either. And this wouldn't really be considered a sell model. Okay. Maybe if we looked at a buy model, that would work. Yeah, right here. This is just a normal fair value gap, consequent encroachment. Let's look for a bullish fair value gap. This is a really small one. But basically, I'll just give you an example. So we have the sell model up here. And it's for the best entries because we usually have displacement up to take out this high right here. And this displacement, it leaves behind a bullish fair value gap. And it also usually gets displaced through if we're forming a sell model. And, or not even displaced through, it could go through it slowly. But we have this bullish fair value gap. And we want to see price disrespected and turning into inverse because you want to see the bullish PDA raise fail, confirming that we are bearish. People like to call order flow. I know Paul would get mad if I said it was order flow. But I just say easier. We failed to take out this high, so we're obviously going to shift market structure. Failure to take this high, we also call it a failure swing. And a bullish PD array was disrespected. That is a clear sell model, and I'd short up here. And this is how I get my best entries. Usually the inverse fair value gap plays, we have the lowest risk reward, 5 to 10, sometimes 15 handle stop losses on my trades, and they're usually like a 1 to 7, 1 to 10 risk to reward. If we had any good examples, I'd be glad to show you, but okay, bullish fair value
So
gap right here, I'll show you. So wait, what?
so would you rather see an inverse fair value gap get
Oh,
tapped
definitely.
into versus like a normal fair value gap being made?
Yeah, this isn't a London session, but yeah, we also I could trade both honestly, but I really like inverse fair value gaps because they give me the most strength. Because you can see we came up higher, took out this high, came up here. We couldn't take out this high right here, so this high is still valid. We couldn't take it out, so we're shifting market structure. We have this bullish fair value gap that should have been respected to push up, displace this high, but we had failure to displace through this high. And failure to displace, it can be seen everywhere. Let me find another example of that because you can see that this is a buy model. I want to see one in New York session. Just to give you, actually I don't want to get sidetracked, I'll show that after. So right here, inverse fair value gap, you can see that we push straight through it, we displace through it. It doesn't always have to be displacement, but we disrespect it, and we tap back into it. And this is where my entry would be. I'd be shorting off here, off the consequent encroachment or the fill of it, right here. And my stop loss, right here, take profit, original consolidation, at the high of the original consolidation. And this would be my stop loss, take profit. But this is only a small 15 handles. But priceless fractal, you can see this happen on all sorts of time frames. Okay. We don't really have much of a bullish example. And I'll show you guys an example of failure to displace past the low. It's usually what we want to see in trends. Okay, we displaced, took out this low, came up higher. Um, I wish I could show you guys a 5-minute example. Okay, came up. This wouldn't be considered 3 drives. But swept this high, we went lower. Took out this low, we went higher. Failure to displace. Let me think. This is our FOMC price action. If you would have held longs, you would be up 300 right now, M2. I'm sorry.
Bro, man, just
I'm
don't say
sorry.
that.
I'm sorry, bro. We'll make it back. Don't worry. You'll make it back.
I
Trust me.
know. Oh, I will. That's why I'm not
I know you
worried,
will.
bro. That's all.
Exactly. Don't be worried. Don't stress out. This is probably like a higher time from 3 drives. Oh, it wasn't. Okay. Basically, failure to displace. We couldn't really displace lower. We were able to sweep out these lows. But we couldn't also push higher. We came up here, formed a little bit of 3 drives. We swept out this high. I'd say you could classify this as 3 drives because it's only the wicks, and that's what I personally like to see for 3 drives. Purely the wicks, and then we got shot lower. But yeah, I would have thought this was seek and destroy because we took out lows and highs. But when we took out this low, we failed to displace above this high and close above. So we are not bullish. But when we took out this high, we had displacement lower, and then we closed below, shifting market structure. And this is where we'd start looking for shorts. Okay, and let's go over my short today that put me up like 2.8k. So, on a paper account, this is not any prop firm affiliated or live account. But, just winked at the camera. But, okay. So low resistance liquidity is forming, and I know our macro time is 2 and at 1. And I saw this right here, and I'll show you. We had, where was our higher time frame breaker? I had our higher time frame breaker marked out, and we were respecting consequent encroachment of it right here. So you can see consequent encroachment was respected here. And when I saw us tap consequent encroachment and respect that same rules applied, the second we went lower and we disrespected the fair value gap, in my head, I was like, we have low resistance liquidity. We are not going to retrace. So entered shorts, 2 NQ contracts with my stop right here at 8 handles, 8 to 9 handles right there. My take profit was this low right here. And this was, what was it called? 67 handle play, top to bottom. And I'm going to throw a picture of it right in here.
Why am I not? Wow.
10 seconds, okay. 10 minutes in. Let me write that down so I don't forget. Okay. So, took out this low, and I knew we were going to go lower because we still had our standard deviation targets in, and I thought we were going to go a lot lower than that. So let me mark it out, because you guys were telling me standard deviation was going to be our target, and you could see that we actually did come down and tap it, but I told you guys, I was expecting a lot lower. And then just our standard deviation. This could have been a good target for us too, because price likes to kind of tease people into getting out at their different prices, because every time I see a take profit about to get hit, as you can see right here, you can obviously see price likes to go off of it, just like what happens with most of us, because I know some of my calls I give out. We get close to hitting our take profit, and we just reject off of it, but we actually ended up respecting this fair value gap, and then we ended up taking our hitting our take profit, and we continued a lot lower. We start going to the buy side of the curve, and this is where I want to see bullish plays. So I haven't personally seen this. After this one winning trade, I closed the charts. I'm like, I'm not going to do anything else. I couldn't really trust myself earlier because I thought I was going to re-enter because I saw it dumping a little bit. So I was like, all right, I'm done. I also exited because it's right in, what was it called, right after the 2-5 of the play. Okay, now going into buy side. Potential plays, let's see. This is just basically a reversal. We got our official market structure shift right here. We started pushing up higher. And past this, not really any good plays. Just straight pumping up and with a lot of chop. Not too good. Option traders, we were getting chopped up. But do we have any questions at all about what I just said or taught?
Mantis, I think I know why we started pushing up.
Where?
Like after, yeah, there was a fair value gap from FOMC. I think it hit.
We would want to fill
C-
those news gaps, yeah.
Yeah.
I mean, yeah, you can see that we did.
Yeah, or it hit the middle of it.
Let me see if there's
C-
anything right here that could have tapped it. Nothing much. We had this breaker. Okay, so breaker right here, not really respected. FOMC gap, we could see this get filled. And Friday, I'm not really sure what I'm expecting for Friday, but as you could see on DXY, we've been dumping. So obviously I'm going to be expecting a pump. We actually pushed through here. Are you guys ready to do analysis? No more questions?
Mantis.
What's up?
We're approaching the all-time high for NAS.
Oh, yeah. We are. Did we already? No, we already
close.
went
Oh,
through.
didn't we already hit
We already hit all-time highs. History has
No,
been
we
made.
didn't.
Yeah, we did.
for NQ? We did.
No, we didn't.
Yeah,
Bro,
bro, Brody, look at the NQ charts.
No, you have to look at, but that's the thing though. That's after the other contract.
No, this is the before
They're
the
all
contract,
over.
and this is after. I have NQH and NQ, both of them, and we took out
What?
all-time highs already.
But look at QQ for a spot. None
What?
of them have hit
Let me
all-time
pause this
highs.
recording. Used on the forex charts. Okay, let's go into analysis. Wait, what's up?
Yo, we still.
Oh man, I have a question. So, hey, when I
I
said,
heard that.
Oh god.
or what? Oh wait. So you remember when yesterday when I said like, what's the difference between like a market structure shift and like liquidity grabs?
Yeah.
I just
Wigs.
picture.
Huh?
I just sent a picture in the chat room or whatever for the voice.
Discord? Yeah.
And isn't that like?
Yeah, that could be a
I mean,
liquidity sweep. I mean, failure to displace and close below. We could see that we had an immediate rejection higher after that. I consider that a liquidity sweep. It all
Okay.
depends on time too.
Okay, because like it did break market structure though, right?
Yeah, we did shift market structure. I think you could see in that picture. We had this low. Yeah, we shifted market structure. Gold back
But it's
levels.
also so
Analysis going into tomorrow. Okay, let's do this real quick.
What? I'm just an algebra.
Yo.
Oh, you're not.
I love this class.
Shh. We're trying to do the recap.
I would jump.
Okay, so as you can see, we already took out all-time highs. I don't really think we're going to be sweeping liquidity. I think we can push into the territory a little bit more. But imagine we just sweep this and we continue lower. But with where we're going on DXY, it looks like we can potentially just continue pushing up higher. And we're dumping on it, DXY. So, of course, I'm going to be bullish. Let's go lower time frame. I mean, we opened above this fair value gap, and we went lower. So I think that's a pretty clear indicator the price does not want to push up higher. We even just placed past this low, which I thought would have been a turtle soup. It wasn't. We're going lower, and I'm thinking we're going to be bullish tomorrow. So just because it's the FOMC week, it's going to be pretty low probability in my opinion. But I want to be more long biased just because of DXY. That's safer to take longs. But this could have just been a massive retracement because we didn't take out this low yet. So I wouldn't say this is a market structure shift. We did go into kind of a deeper discount than I wanted to see, or a deeper premium than I wanted to see. So we're in a high premium, but for our little intraday ranges, I think we look pretty good for taking longs. Because you can see, what's up?
Look at my stream.
I know, I see it. Okay, as you can see right here, we didn't take out any lows, but we are breaking structure above. Boom, break a structure, boom, break a structure. Just continuous break of structure. So I think this is our deepest retracement we got. I want to see if we have OTE real quick. Just this low, did this high, and just see what it looks like. Okay, so yeah, we did tap into the OTE zone, which is also coincidentally lines up with this consequent encroachment of the, what's it called? Fair value gap from FOMC, or the FOMC gap. So pushed up higher. So we did tap OTE. We respected OTE. I don't know if there's an equilibrium to this stuff. We could see there was one, and see if we respected that. Ah, it's coincidental. We did. So equilibrium OTE respected. I'm expecting higher prices tomorrow, honestly. So let's just see what news we have, and we'll make an assumption off that. Let's go to. Uh-oh, what is that? Huh? I don't know what that was. Okay, let's go to Forex Factory. Friday, flash PMI 15 minutes after market open. We should be fine. PMI week's kinda bad, but we can survive. We can take a trade. I kinda lied about that, but we should be fine. We can trade maybe like 10. We'll trade at 10 tomorrow. I'll be giving out more calls because I'm out of my low emo. I feel more productive now, so I'm feeling pretty good. I think it was just because I got like mini brain damage from boxing, and that messed me up a bit. But we're back in it. We're back in the game. I'm going to be giving calls tomorrow with happiness, with joy. We're going to stay patient, disciplined. We're going to go into the day tomorrow strong, okay? Everything good?
Okay.
All right, perfect.
Yeah.
Aye, aye, Captain.
Aye, aye.